Washington's got plenty of budget reaction from business leaders. But first, Sean, you've seen that the Bank of England's been in touch with its counterparts as the banking giant Credit Suisse says it needs to borrow more than $50 billion to shore up its finances after that big stock price crash yesterday. How worried should we be, Sean?
Well, it's a question many are asking, Amal. The FTSE 100 was down almost 4% yesterday, and the question marks around the global banking sector still very much around this morning after the collapse of Silicon Valley Bank in the United States at the end of last week. The government there moved to calm the nerves by protecting customer deposits at the bank. HSBC, of course, bought its UK arm here. Now all eyes are on the long-troubled Swiss bank, Credit Suisse. It's lost money in the last couple of years. It's faced a string of scandals in the last decade. Tax evasion fines, fraud, anti-money laundering. Lost billions in that scandal at the supply chain company Greensill, if you remember that. Earlier, I caught up with Dan Davies, Managing Director at Frontline Analysts and a former bank analyst at Credit Suisse, actually, from 2007 to 2011. Before that, he was an economist at the Bank of England. He told me what he thought was causing the problems there.
Millionaire and billionaire money is jumpy. Millionaires and billionaires do not like taking risks. The millionaire and billionaire client base basically seems to have just reached the end of their tolerance, and they've been taking money out over the last 6 months at what began to look like an increasing rate. And that was the position that we were in as of yesterday evening. And overnight, they have now got a loan of 50 billion Swiss francs. That's something like 54 million US dollars from the Swiss National Bank. So they're now in a position where they've got really quite substantial support from their domestic central bank. And so that could actually change things quite a lot, because in a condition like this, where you've got something beginning to be not exactly a bank run, but a sort of walk moving towards jog pace, that's exactly the time at which big support from an industrial country central bank can make a lot of difference.
And what should, the Bank of England, we know, is in touch with authorities in Switzerland. I mean, you would sort of expect that. I imagine the Swiss authorities have been getting lots of calls from regulators right around the world in the last few days saying what's going on at Credit Suisse. So should we be concerned about certain situations in our banks here? Obviously, we've had one this week, SVB, the UK arm, that's had to be bought out by HSBC.
Yeah, although in fairness to the UK authorities, they handled that one over a weekend, and they handled it actually pretty well. The nature of those calls going back and forth between London and Zurich will have been that the Bank of England will be asking their central bank counterparts in Switzerland, do you stand behind this thing? Because the nature of these crises, is that when you have a real massive deposit run, it's like a tsunami. Nothing humans can stand in the way of it. The only thing that you can do is stop it before it turns into a proper deposit run. And the only people that can do that are the central banks.
Dan Davies there, formerly of Credit Suisse and the Bank of England before that, now Managing Director at Frontline Analysts. I've got Freddie Cahoon with me, Investment Director at JM Fin. Morning, Freddie.
Sean.
What are you investors going to be